Dear friends of Volumetric Trading, greetings from Eduardo Burattini. This is an analysis video on the American market close for Wednesday, the 9th of July, in preparation for tomorrow, Thursday, the 10th of July. I'm making this video now because it also serves as a good summary of what happened today, while already giving us some important levels to help us understand what we might expect from tomorrow onward. All right? So, for tomorrow, this video will obviously, as usual, refer to the S&P 500 and Nasdaq. So today we saw the S&P 500 form what you could call a fairly significant consolidation, but more than a consolidation, I would actually describe it as an acceptance. A very significant acceptance that therefore also determines a continuation of the strength that has already developed over the previous sessions, in today's session and in last week's sessions, which, by the way, led us on the 3rd to the formation of the all-time high. Basically, at the very beginning of the trading week, we observed this extended period of fairly pronounced sideways distribution, particularly noticeable on Tuesday, the 8th of the month. Today evolved with this rather energetic opening that first led the price to retest what was the established value area from the 3rd. This significant retest occurred after a period of considerable market activity, and in my opinion this is already the first important thing to consider, because we had a price that right at the open directly reached the value area of the day that created the all-time highs. So this already means something. Then in today's session we saw a rejection, we had absorption in this area, as we can see here also from some big trades, which basically caused the market to completely pull back on itself and go looking for support levels. Okay, all normal. It's something we've seen many times. It's not the first time it's happened, and it won't be the last. But what happened next following this action, I'll spend a few more words on this, because we'll see that the exact same thing happened on the Nasdaq as well. The market went back to look for supportive area supports that it found right at the end of this move. So at the retest of yesterday's value area, or rather the retest of the area that was, let's say, confirmed yesterday, but had already started to develop in the previous session. And here, as we can see, there was quite a bit of a battle. There were several absorptions that clearly stopped the price. The fact is that at the end of all this battle, we see that the area immediately below was rejected, and a new acceptance was built above it. Acceptance was built above, thus resulting in the rejection of both this level here, so the 6,287 level, which is a few ticks higher for us since it's important as the high of a weekly value area, more precisely last week's value area. And just a few points below, right around the 6,281 area, we still had a very nice structural zone regardless, because here we had the value area high from, let's say, the previous 2 days. We had a bit of untouched area here at 6,272, as well as the settlement from Wednesday's session, which didn't even get retested because the buyer's counter reaction was so strong, okay? And in my opinion, considering what happened afterwards, this was a very significant acceptance. Anyone who watched the current session will have also noticed that at a certain point we had some nice blocks of liquidity attracting to the north, so this fit perfectly within what was already a framework of building strength. And what did all this lead us to do? Basically to rebuild its own acceptance zone above. So the entire value area from last week was rejected. On a smaller scale, the value area from the previous 2 sessions was also rejected. Basically, we had a close, so a potential settlement right on the POC, on what then became the POC of the day, which is also located in the upper part of the range. almost right next to where the rejection happened today at the open, the one that then led to rebuilding the support. So let's say that realistically, I consider today as a failed test of what was the acceptance area, the acceptance zone that had been created previously, so the one we are coming from. After a move like this, clearly I expect tomorrow, whether it happens during the Asian session or the European session, we'll only be able to see that as things unfold. But after this kind of setup, I mainly want to see how the now important and technical area of 6,310 will be traded, right where we saw the rejection today immediately at the open. Because any possible accel, let's say, this is now the only resistance zone we have left. And losing this area to the upside would mean going back to accepting within the session of the 3rd of July, which, as we've seen, for those who were in the market, was a particularly bullish Diane open drive, the open creation of all-time highs. In short, it was definitely one of those days to remember. And generally following this kind of action, we would have the definitive confirmation of a market that likely wants to go on to make new all-time highs, okay? So at the very least, it will retrace its entire acceptance area that it created while making the all-time highs level by level. Structurally, it should give us a path toward the creation of new highs. However, we'll see what happens. Let's also take a look at the Nasdaq, actually, just a quick look, because it was practically a carbon copy of the S&P in creating this dynamic. You can see that on the Nasdaq as well, we had exactly the same thing. What was particularly noteworthy was this rejection. Let's take a closer look at it. Here it is. This happened right here. Again, we were exactly at mean market for, here it is, this level at 22,930, which was practically the exact same thing as that important rejection we saw on the S&P. Here too, we had a complete rejection of what was the value area from the previous day. And here as well, we had a confluence with the rejection of last week's value area. It was just 10 points away, but on the Nasdaq, 10 points is absolutely nothing. So we can definitely consider them as part of the same area. And here, the only thing worth noting is that we had a close with a POC that hasn't really followed the price too closely yet, okay? But here too, we find ourselves right in front of, so in the area of 23,000 and some change, 23,080, 23,100, let's just call it. Generally speaking, the 23,100 area, where by rejecting the market here as well, our goal analyzer tool has created a bearish acceleration zone, which for now serves as a potential resistance level. So you can see that we have exactly the same situation, the exact same dynamics in sequence as the S&P, replicated and created in exactly the same way on the Nasdaq as well. On the Nasdaq, in addition, we can also see never a bad thing as an extra clue that when the market rebounded from this rejection and the refusal it made from the value area, it started off with some fairly significant and repeated upward accelerations. So this definitely reinforces the whole picture. Obviously, this analysis is intended for educational purposes only, so it should in no way be taken or considered as an investment solicitation or a recommendation to take a position. Thank you all for your attention. See you in the next analysis video, and happy trading. Best regards to everyone.